when that manipulation is removed, you're going to get this huge, massive reset higher. And that's what's happened to silver over the last couple of decades. A manipulated market like that, where the banks that control it can use it against you, that's pretty tough to consistently win. So I understand it from a trading standpoint, but think of it from a monetary standpoint first. The world of unbacked currency, where the pendulum is swung all the way over here to just completely, they're just issuing it like doesn't even matter anymore, right? Here, another trillion here, another trillion there, and the Fed's going to monetize it to the point where the only reason it has any value perceived at all anymore is because people still accept it, still accept the dollar. They start to lose confidence in it. That value is going to fall pretty fast because there's so many of them. Eventually, that pendulum swings all the way back to a currency system with some kind of sound money and backing, and silver's been money even longer than gold. The other part of it, though, is, and again, I was trying to think of it as you were asking me the question. I was trying to think of a relevant way to answer this. Think of like rent control in New York City, maybe is the first thing that comes to mind. Living space is so tight in New York City, and I don't know how many other cities do that. They have rent control, which caps the actual amount that people pay, right? Well, the value of it is actually because, inflation, everything else should be far more. And that manipulation holding that price back, the farther and farther it goes, the price has been manipulated and held low for so long that the dynamic that should be pushing up has been restrained. And so if that dynamic's removed, we have no idea what the actual price of silver would be, because every single ounce that's publicly available has been levered and relevered and hypothecated and rehypothecated so many times that there are probably 100 beneficial owners for each ounce. And so when everybody shows up at the same time saying, no, that's my ounce. No, that's my ounce. No, I got a piece of paper here that says that's my ounce. The hell's really the prize? And so for the long-term holder, you've got that sound money aspect. And then second, the total distortion of the price discovery method, that once we shove these banks out of the way and get back to some kind of physical price, it's not going to be $27. It's not just wishful thinking. My forecast this year, without all of this stuff factored in, because who could have seen this even a month ago, was in a commodity bull market that we're generally starting to see now. After about 8 or 9 years of general decline, a lot of commodity indices are starting to break out. And I still think, even though it's, it bounces, I think you have a declining dollar to push that along as we go through this year. There are a lot of kind of like mainstream analysts out there, investment houses, sell-side research firms that have $40 targets, $50 targets for silver, regardless of everything else, just because it's such an important industrial commodity. And that's not even having that price target in place, didn't even take into account this soaring investment demand. And so of all of the silver that gets mined every year, a large part, let's call it maybe 60, let's just call it 2/3. It gets chewed up and consumed in industrial purposes, solar panels, all that type of stuff. The other third is for monetary investment, people buying eagles, and maples and stuff like that. Well, what happens if we double that demand this year? Instead of buying the SLV, just keep buying physical metal. Well, eventually that's going to sort itself through price, because Jake, this happened back in March, and you'll remember this.
Right.
Remember when COVID was kicking in, and the liquidity was drying up, and the markets were freaking out, and the stock market was crashing. COMEX silver, the derivative trading, went to 12, and everybody was like, "Hey, I'd like to get me some of that at 12." And then you go online or you go to your local coin shop and they won't sell it to you for less than 25. And regular people were like, what the hell's going on here? I was just on CNBC. They said it was 12. That bifurcation of the market calls into question the legitimacy of the entire price discovery scheme. And so at some point, even though we had QE to infinity announced, shortly thereafter, we were going to get those prices back together. And we met about in the middle, sorted all that out, and then we went from 20 to 30 last summer. The same thing is happening now. Everybody, all this attention in silver, and everybody knows that dealers don't have any of it, and it's all sold out, and they're like, I don't know when we're going to get any, and yet it falls $3 yesterday. Same thing will happen again. Either that premium is just going to have to completely collapse and fall all the way back, back down to you'd be able to acquire it close to that COMEX price, or they're going to have to allow higher prices because it makes the whole $27 thing completely illegitimate. The run that we've been on stretches back to November and December of 18, because the Fed had spun these plates in this illusion that they were going to, remember they were going to cut their balance sheet, normalize it back to $1 trillion. It's now what, 7 or 8? And they were going to normalize interest rates, which to service all of the existing debt at 5 or 6%. So anyway, they got it up to about 3% on the 10-year Treasury. And the stock market started to collapse in late 2018. And so recognizing that, I thought, okay, they've pulled this, the rubber band as far as they can go. And so where we'd been trading sideways in gold and silver for about 5 or 6 years, never getting above 1350, I thought, okay, this is going to be the year we're going to break out. And I put a target out in 19 of 1520, somewhere around 1480 to 1520. We actually finished the year at 1519.95. So that worked out okay. So then I thought, not knowing about COVID, I thought, well, why wouldn't this continue next year? And when I wrote the 2020 forecast, I thought, well, just, average bull market gains about 20%. That would be about right. So I came up with $1,800 gold. And then I thought silver would run into a lot of resistance in the low 20s. So I didn't know if we could get through there. And obviously we had a much better year than that. And COVID, again, you couldn't foresee that. Well, then as I'm writing this year, again, the conditions are the same. What's Biden going to spend? Like $5 trillion? I mean, it's outrageous what they're doing. I mean, we're headed down that modern monetary theory path where the Fed just monetizes everything. And I thought, well, it's not going to be easy. Why wouldn't it just keep going up? And plus, you could say the central banks want a higher gold price because they're trying so hard to foster inflationary expectations. So I went back and looked. Again, average bull market gain the last time we had a 7 or 8 year run in gold was about 20%. So 20% on top of 1900 is 2300. Usually when you make a new all-time high in just about anything, you make those new all-time highs and then you get some notoriety and some headlines and some crowd and some frothiness and you overshoot it by about 10%. We go 10% past last August highs, we're right about 2300. So there's that number again. Silver, I figured, should do better than gold. And silver's a little bit easier, Jake, because there's a chart. Gold's off the chart. I mean, we're well above where we've ever been. And we were projecting that too. And you're like, well, then how do you use a chart? Well, silver, we can actually use a chart. And I thought we had a shot at 38, maybe 42 or 44 this year, regardless of all this other stuff, just because of the fundamental stuff that's driving in the first place. But man, if we keep this movement going, and the critical part to the movement is physical purchasing. One tube of Eagles will help. And that's 20 ounces. It's 500 some odd bucks, $600. Everybody, if we get everybody to do their part to take silver out of the hands of the banks and into your own, that is going to force eventually a deleveraging of the system. And then that's when that's what we're waiting for.